Hey guys, it's Jats, and in today's video, we'll be going through a complete beginner's guide on how to start investing with live examples. And by the end of the video, you will have enough knowledge to make your first investment. Let's first talk about the importance of investing and why you should start as soon as possible. We all know with the current times, a single source of income is never going to be justified, as by the time we finish paying our bills, we are left with only 10% of our income. So what can we do? We can look for other places to make income. Now, there are 7 types of income. Earned income, profit income, interest income, rental income, capital gains income, dividend income, and royalty income. Now, as you can see, investing holds 2 types of income sources, capital gains and dividends, which is the reason why most people choose it. Now, before going to battle, it is important to cut down on things that can bring you down, such as high interest debt, while also having a backup plan in case anything goes wrong, as investing is risky. So let me start off by telling you why removing your debt is so important. Let's say you have a debt of £3,000 and every month it increases by 6%, and this is your investment portfolio of £3,000. If you keep adding that £100 into your investment portfolio for a year and assuming you get a 10% return annually, at the end of the year, your investment portfolio will be worth £4,620, which is an increase of £420. However, this would be your debt by the end of the year, £6,036.59, which is an increase of £3,036.59. This is why it is best to pay off your debt first, as the returns are far less than what you have to pay in debt. After clearing all the debt, it's important to start creating an emergency fund. Now, I know it sounds scary, emergency fund, but it's rather simple. You need to have some money around just in case an emergency arises and you need money immediately. It is recommended you have at least 6 months or a year's worth of living expenses cash ready to use just in case you lose your job or a medical emergency arises. Now that we have covered off the basic requirements you need before investing, it is time to understand the basics of investing. What are stocks, shares, and how to make a profit, while also showing you a live demonstration. So what are stocks? Well, it's rather simple. Let's say I own a food business. I'm making enough money and I'm looking to expand, but I don't have enough money to really expand. So as a business, what I can do is take out a loan, which will mean I would have to pay back the money plus high interest, no advice option, as I would be paying back more than what I took. Or I can choose to go public and announce an IPO, initial public offering, where I would break up my company into shares and sell the shares to the public. And anyone that wants to buy the shares will own a part of the company, but as a business, I will take the money to grow. An example of this would be General Motors. After the financial crisis in 2008, they filed a government-approved bankruptcy in 2009, but managed to raise over $15.8 billion in 2010 through their IPO. So now that we understand how stocks are made, let's move on to more of the technical aspects. Let's say with my food business, I decided to offer 10,000 shares valued at £10 per share, and you bought, let's say, 50 shares. You have to give me £500 in exchange for the 50 shares, which are said to be valued at £500. Now, I can use that money to expand and grow, whereas you will hold those shares of the company, and depending on how well I perform, the value of the shares will increase, as other investors looking to invest would be paying you more money for those 50 shares you have. This is how the stock market works. People bid on the value of stocks depending on how well a business is performing. However, let's say my business is doing bad, then the value of your 50 shares would go down. So you would lose out on some money. Now, this is just a basic explanation of the stock market, but let's talk about where the real magic happens and how you can buy shares of your favorite company. What you will need is a broker, just like our sponsor for today's video, XTB, a trusted and regulated platform that allows you to trade stocks. They're an award-winning company with a very user-friendly and advanced trading platform, so anyone can start whether you're a pro or not. For example, let's say you want to buy some Apple stocks. All you will need to do is create an account on XTB's platform. Now you simply need to go ahead and find the stock that you want to buy. You can either search it by countries or you can type it in the search bar. Then simply click the buy button and you bought yourself a stock. It's as simple as that. What's super cool is that XTB are offering 0 commission trades on stocks, meaning that you won't be charged fees by XTB when making stock trades. So you can check them out using the link in the description, as this offer is there for a limited time only. So we now know how and where to buy stocks, but how do you make money? Well, as I mentioned in the start, you can make money from 2 things: capital gains and through dividend funds. Capital gains is simply any profit you make off when selling your stocks. For example, let's say you have a stock of Tesla, which you bought for £500. Now the stock price has gone up to £700 and you decided to sell the stock. You just made yourself £200 profit because 700 minus 500 equals 200. Another way to make money is through dividend funds. Let's say Tesla had a great year and they made a lot of money. They can be kind enough to pay all their shareholders extra money for being loyal to the company. Apple is a well-known company that often gives dividends to their shareholders, as well as Coca-Cola and many other companies. Now the most asked question is, what should I invest in? Well, investing is a competitive market. No one really knows when a stock will go up or down. It is all to do with experience. Moreover, I'm sure you have understood when you make profit, someone else on the other side is also losing money. As when you sell a losing stock, someone else has to buy that stock. So if the price keeps going down, the person has essentially lost money. But the way I like to invest is to look into companies that I use on daily basis and I see a future in. For example, I have this Apple iPhone and I do believe that this company will keep growing because as new iPhones or any new Apple products come out, Apple users buy them just because of how great of an ecosystem of products Apple has created and how interlinked each and every product Apple create is. But I am not a trading expert and this is just my way of investing long term. So the best thing to do would be to learn from a platform like XTB, who provides you with comprehensive educational resources and one-to-one mentoring to help you improve your skills. And not to mention, they also provide you with the best market analysis tools to help you learn more about the companies you want to invest into. Now, if you don't want to take the hassle of going into super detail of learning about what to invest into, then you can choose to simply invest in a basket of stocks called index funds, which are far safer than trading into individual stocks. As if a stock fails, you're more likely to lose all your money, but in an index fund, when one individual stocks fail, you have other companies to cover up the losses. My top favorite index funds is the S&P 500 that holds America's top 500 companies and FTSE 100, which holds top 100 companies of the UK. Now here's the crazy part of long-term investing due to something called compounding. The average return on the S&P 500 has been 10% each year, meaning that 20 years ago, if I only invested £100 a month, by now I would have made over $52,569 via compound interest. That is crazy, but here's what's crazier. If I continue doing the same thing for another 20 years, then my portfolio would be worth $589,678. That's $500,000. And this is why if you want to invest in index funds, it's best to do it while you're young so that over time, it will give you high returns due to compounding. So to conclude this video, first, understand where you stand before investing. Second, research on companies you want to invest in. And finally, set up a trading account so you can start trading. But most importantly, it is crucial that you remember investing is a long-term game. You won't see much results in the short term. So learn throughout the years from your experience, as that's the only way you will learn, and eventually you would have built the life that you wanted to. If you enjoyed this video, don't forget to leave a like, subscribe, and go check this video out because you will love it, and I'll see you there. Take care and peace.